The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down $1.36. You get the Nasdaq up 13, S&P's down 13, gold contract down $2.70, trading at $12.49 an ounce. We get silver down 5 cents, $14.65 an ounce. Light sweet crude down $1.15, $51.47 a barrel. Notes and bonds. You get the 10-year note down 2 ticks, 120.21, 30-year bond up 8 ticks, 143.19. King dollar up by 314 ticks, 96.790. The euro, folks, is trading at 114 to 1 US dollar. The yen is out here at 113 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Well, guess what, folks? You got an ABC structure on the way down that is actually going to blow away the February high-volume swing low. If we go over to the S&Ps first, what you're going to see just happened here is this. You took out the swing low that was established out here basically this morning. It's 100-point A to B. Your A point on this is 2709. Your B point is 2610. So you get 99 points. Bottom line, you take that 99 points off your 2641. You get 2641. You get 2542. And if we pull this back and take a look at this continuous contract, what you're going to see is we bring this back. And you're going to see that the high volume low that we've been looking at out there from February 9th is 25.29. So bottom line, this is the run. This baby, I expect what you're going to see is that the run is on. The volatility is going to stay high. Bottom line is that you're going to see this thing. You know, I suspect that the run's here today. You know, bottom line, what we don't have. You don't have enough time for the end of the year, folks. What happened last week is that the S&P had the shot to do the bounce, failed on price, failed on volume. See ya, don't want to be ya. This is going to be a nasty close into 2018. We go take a look at the XLF. What you have out here with the XLF. This is also breaking the lows. You get volume behind the move. It's already basically broken down. The XLF is on its way down to basically 20 bucks. JP Morgan, we go take a look at JP Morgan. What you have with JP Morgan out here, this is also breaking out its low. The low that we're breaking out here in JP Morgan this morning is the 103.11, and it's going to have the volume. 103.11 had 17 million shares. You're already at 3.7 million. And guess what? If JP Morgan's breaking down, man, see you later. You know, that's the premier bank out here. So, you know, next stop for JP Morgan is going to be 97. We go over to the oil market. We take a look at oil. What we have with oil, oil got the bump up last week. Oil's down 2.7%. Let me pull that one. Okay, so oil got to a price point last week. I think it was 53. Let me see this thing. Yeah, we get the 54.22. Couldn't hold price. This is going to go right after the 49.41 again. I expect what we're going to see in the oil market is that baby wants to get down into approximately the $45 area. What's really intriguing out here this morning is this, is that you have the dollar index up 294. We take a look at the dollar index. What you're going to see is this. You actually got under the 450 today, the 96.450. And you're going to have volume. So what you actually have here is that this is breaking down with expansion of volume. We've done 20,000 contracts thus far. That's good contract volume. So what I expect we're going to see, not necessarily today, because if we go over to the pound, what you're going to see is this. The pound is getting smoked, toasted, roasted, all of the above. But guess what? It stopped dead in its tracks at 126.06. And the 126.62 is the number to keep your eye on, because what you have here is that you have the aspect that it's a moving fast situation in the UK. And Theresa May, she basically postponed the vote on Brexit tomorrow because she doesn't have the votes. You can continue this high volatility out here. But that's saying, bottom line, that the pound is actually going to go higher. Euro went slightly higher out here today. That's still building cause for higher price. And if you're in the metals market and we go over and take a look at the yen, what you have inside the yen is that the yen is basically holding price out here today. The yen got down to a price point of 112.24 last week. Right now, you're at the 113 level. We go into the NDX 100. We take a look at the NDX 100, the 3 Qs, strength versus the weakness out here. What you have with the 3 Qs is that this is just building cause to get into that. So the Qs have a few high volume lows. So you get the high volume low that was established out there on the 20th of November. You have the higher high volume low at 150. And right now you're at 161.53. If we go to the Dow Industrials, we take a look at the strength versus the weakness inside the Dow Industrials. What you're going to see out here is only 3 stocks in the Dow Industrials that has any green whatsoever. You get Boeing putting 6 negative points, United Health 27, 3M 11. The only stocks thus far that have any green at all, you get Microsoft putting 6 positive points, IBM putting 2, and Intel putting 3. We go to the NDX 100. We take a look at the NDX 100. Inside the NDX, Qualcomm is up 3%. You get Facebook up 3%. They're buying back a bunch of stock. NVIDIA is up 2.3%. Taken away from it, Ultra Salon is getting smoked once again. That's down 4%. You got Mylan Pharmaceutical off 3, Celgene's down 2, and Apple is off 2. We get over and we take a look at Apple. You're at 165 in Apple. That's getting toasted. And Apple is going after your February 9th high volume low. So Apple's going to be one of the, well, it won't be one of the first ones because Google was the first one to test it. Bottom line, Apple has come down in the matter of basically 8 weeks from a price point of 233, and you're going after that February 9th low. Now, that all being said and done, folks, here's the bigger problem. When you're looking at these markets, I'm going to go over the UK first. You take a look at the UK. We're in a one-world market. And the UK, as well as the DAX, blew away these high volume lows. So the setup here is that the market is actually building cause to not only get to your February high volume low, but I expect we're going to basically blow it away. And this is how it's set up. In the UK, you're trading at 67.60. Well, the high volume low was 7073. So the way this is trading now, that got toasted last week. In fact, it's it's an ABC down. So check this out. The A point on this is 75.52. Your B point is 68.50, so we get 700 points. Your C point is 7,100, so we're dealing with basically 6,500. And if we go to 6,500, what you're going to see, that's where we had strength going back from July of 2016. So 6,500 is game inside the UK. We go to the DAX. You stay right there. We'll go to the DAX because this is serious business. Because if the S&P doesn't hold, which I suspect it's not going to hold at that high volume low, you're going a lot lower. Dow Industrials right now down 118. Nasdaq's up 22. S&Ps are off 10. Come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 144. You get the Nasdaq up 16. S&Ps are off 12.5. And let's go over to that gold contract. We take a look at gold out here. So what we have with gold, you get a flat market out here this morning. You have done 122,000 contracts. Now, this is dynamite contract volume for pushing into swings, folks. Okay, because that's saying that the gold contract's going to basically do about 250,000 contracts, maybe 225. And you pushed into this high volume swing point on the 26th of October. What that sets up 1330 gold. You know, all the launch here, you do this launch. This is a nice consolidation that started on the 17th of July. And bottom line is that you've pushed into it with volume. So it's going to be pretty cool watching this whole thing shake out. If we take a look at the XAU, the HUI, what you're going to see inside the XAU as well as the HUI is that took out the swing high of November rather, last week with volume. That means that we're going to go after the high volume spike in November, which in the XAU case is 71. And that's going to be the launch there also. You know, first I expect when you'll get up to that level, then you got the launch taking place, and then that would set that baby getting up into the 84 area. The Gold Bugs Index is the same type of setup. You had volume behind the move last week. You took it out with volume. We're up $1.58 right now. And we took out the 152, had volume behind the move. Next leg up here is 158. And the way that the actual HUI is running, it almost looks like that baby wants to do it out here today. If we go to ABX, which has been the leader out here, by the way, you're going to see that already is at the highs that were generated out here in last July. So that's been the leader, and of course what that's all about is that's when they're getting together with Rango Resources, and that is going to be one powerful company. You're going to have the CEO of Rango be the CEO of that combined company, and you can see that what has happened in the Rangold aspect, you're trading 87.21. Well, your downdraft, which was a nasty downdraft, this is the same February high volume low, That gold basically ripped that apart, took it out in spades. Well, now it's just the opposite way. Now it's digging into that bar, and it has volume as it's digging into the bar, and that's what it absolutely needs. The top of that bar is 96, the bottom is 81, you're already 87. When that happens, your probability gets much higher that you're going to make this run all the way up to 104. So there's lots of action out there, and I expect what you're going to see is this. It's going to be all about the good old U.S. dollar. It's all going to be about rates, and if we pull up the Fed Fund future rate, what you're going to see out here is that if we bring this back 4 weeks ago, folks, what you had is that as you're looking at this table, if you happen to be watching Tiger TV, if you're looking at this table, the December 19th, your probability is still 69%. So that's going to bring the effective rate up to 2.225 to 2.50. That's December 19th. Now watch what happens though for 2019. For 2019, 4 weeks ago, we were over 50% on 3 different short-term rate hikes in 2019. Well, guess what? There's not one of them that's over 33% right now in 2019. That's how dramatically the rate structure has come down. And if you go over and you actually just take a look at the amount of buying inside the bond market, what you're going to see is that correlates with that in spades. Bottom line is that your 10-year made a straight line move from November 7th at 117 to 120.20. Your correlation in the yield is that you're yielding 2.85. We bring this back, and if I put this on a 6-month basis, what you're going to see is that we're at the lower end on a 6-month basis. The yearly basis, I believe we're right in the middle. Yeah, we're right in the middle of the year. The way this is set up, guess what? 2.5 is game once again, which is a mind blower. I understand, but bottom line is that that's where this market is saying it wants to go. We take a look at the 30-year, and the 30-year is basically gangbusters. If I put this, let's see, I'll put this on a continuous contract, so you can see how this launch is taking place in the 30-year. You're going to see that you talk about a bar, man. We went from 140 to 144 on a weekly basis. You're already in the larger range. This baby wants to get into the 147. Now, you launch the 147, man, and then you are talking business, man. This is like something else, really is. And, bottom line is that what we haven't done, and this is the big heads up inside the bond market. The bond market still hasn't broken its uptrend since 1981. That's the bottom line. You can go back from 55, 05, 1981, September of 1981, hasn't broken it. That's about it would have had to get down to the 133 area, and we hit 136.16. So what does that do? Well, if we take, so watch this. This gets more bizarre. If I take a retracement value off it, I think we did almost a 0.618. Yeah, well, you did a 0.786. So you did a deep retracement. But guess what? On a deep retracement like that, now this is on, you're talking about almost a 2-year deal. So that's saying that, yeah, your probability is that you're not going to take that high out. But the probability is still on game that you actually can get to that level. That's the thing that's what looks like it's on the table here. That's the way it seems to be shaken out. We take a look at some of the higher volume equities out here today. You have Advanced Micro is up 56 cents. You got Apple down 262. Facebook is up 430. We'll take a look at that. Facebook is buying back, I believe, 9 billion in shares. Transocean is down 14 cents. That stock's in big trouble. Nvidia is up $4. You get Square up 156. Nutrisystem is getting taken out. That's up $9.45. And if we go over and just take a look at Facebook first. Yeah, that's a dead cat bounce. So you have $4.27 in Facebook. And the news on Facebook. Okay, so Facebook is getting serious about combating its more than 20% year-to-year stock slide, announcing over the weekend it will buy back an additional 9 billion of its own shares. The new buyback is in addition to a share buyback plan of 15 billion that the company announced last year. So great. If we take a look at Facebook, they're buying all the way down, folks. This is typical. Yeah, you're buying from 218 down to 141. If we take a look at Facebook, we put this back a bit, you're going to see, okay, so Facebook already blew away the high volume low from February. Facebook is game, well, maybe it already hit it, 103. Yeah, looks like Facebook is game for like 117. We come down to 126 3 weeks ago. But 117 is game now, and that's going to be the highs of February of 2016. Yeah, Facebook has a few problems in paradise out here. Dow Industrials right now down 151. You get the Nasdaq up 7. S&Ps are down 14. We got an ABC structure on the way down, folks. It broke the B point intraday out here. You got a 99.8 to B equals C to D, which will bring you down to the February high volume low in the S&P. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 160. You got the Nasdaq flat. S&Ps are off 15. So if we look at this for the yearly basis, folks, you have the Dow right now down 1.7%, as is the S&Ps. The Nasdaq is up a 1.2. That being said, guess what? We go take a look at those SMHs, because the SMHs, folks, bottom line can take the Nasdaq up, take the Nasdaq down, all of the above. And what you're going to see in the SMHs right now, we're trading it up 47 cents. put this up. So we're at $89.95. What you're going to see is that you had your high volume low from February 9th. That high volume low is $93. Well, we went, bottom line, we went back up to 114. And guess what? We not only came down to $93, but you broke it with volume. Now, this is another heads up, another nice piece of information market-wise of where this whole SMH wants to go. So 93.88, you're down at 66 million. Well, guess what? You took it apart with 68 million. Then we accelerated to basically 52, tried to get higher, couldn't handle it. Come back down with 52, and if we bring this back, what you're going to see is the SMHs, the way that you would take this point-wise, I take the bottom of 93. You basically, I'm not going to take the spike high, but I'll take the top here of 112. And what ends up happening there, you get basically 19 points. You take the consolidation, you take the 19 points off of the 93, and bottom line is you're at 74. And let's see where 74 is down here, man. Yeah, this thing is toast. 74. Pretty intense. You're actually going all the way back to January of 2017. And there's nothing there to hold it, by the way. So let me put this on a monthly. So we're looking for 77. 81, there's a little juice. Yeah, this is a problem, man. Because really sick. Well, we'll see where this goes. Because we went up so fast in 2016, you know, we went from a price point of 45 nonstop all the way up to 114. This is a problem, man. This is a little problem child, because that's actually saying that 55 is game. That'd be quite a deal. Let's go take a look at NVIDIA a second. NVDA. Let's see what that's showing. So NVIDIA. First, I'll put it on. Okay, so takes out its high volume low. 147 million was the February high volume low. 147, so it takes that out with light volume, yet the volume accelerates. You're way below it. Okay, so the first place that NVIDIA, you know, got some support was basically at the 142 area, which would make sense, because the 142 area had volume. That's June of 2017. We had, on a monthly basis, you had 586 million. You get into that with 404. Now, that being said, it's going to make another run for this low again. You can see it hasn't been able to hold price. So 147 is going to be game again. And actually, 133 is going to be game. And this is volume off the high, too. I mean, this stock is actually in bad shape. You got May of 2017. So in 3 months, it basically took out a year and a half of buying. And that's a huge problem. You got to remember something. What we have here is this. You have 15 trading days left to the end of the year. So if you remember the first time when we were coming off these highs, we had 59 trading days. At 59 trading days, money managers make the decision, okay, at that point, the market was up 10%. The ones that made the decision that, okay, man, I'll take my 10% and go, guess what? They scored beyond belief. At least going delta neutral. They don't have to sell anything. If they went delta neutral inside the option market to cover their portfolios, bottom line, it cost them a little insurance. Other than that, they're still going to be fine. The ones that didn't, this is a huge problem, because when you're talking about 15 trading days into the end of the year, you're talking about Christmas Eve, I'm counting Christmas Eve, and I'm counting New Year's Eve. Guess what? We really have about 7 to 8 trading days. You get all this week, you get all this week, and you get all next week. This is what you're seeing here. And as the acceleration gets lower, it's a problem child. It's certainly a problem child. You get over and we take a look at the XLE. We know the XLF is toast. The XLE, bottom line, also breaking out its lows out here with $62.98. This, yeah, this just did it. Okay, so February high volume low, 64.45. We had volume there of 155 million. Last week we did 103, so you got lighter volume, but what is sticking out here is 56 bucks. Let me put this back. Yeah, this is thick. Okay, so your bottom, the XLE actually has been in a huge consolidation since 2010. And, you know, trading oil stocks, folks, are really cool because what happens is that they love staying in these big, big consolidations. You know, whether it's selling the top, buying the bottom. Your next stop in the XLE is $60.78. That's the high of January 2016. If it can't handle volume on that point of price, the bottom of that is game, and that's 49 bucks. And we've been in that consolidation since November of 2010. That's pretty intense, man. November of 2010. Wild. We get over and we take a look at the GDX inside the gold market. GDX out here, this took out its swing point last week. Really, if you happen to be in the metals market, folks, what has happened is this. The metals are basically trading totally different than they were in 2006, 7, and 8. Bottom line, last week they were the only ones that are green. This week the same thing is happening. This is going to be a huge heads up, and this is going to be all about that interest rates aren't going up. That's how this seems to be shaking out. The GDX last week, we did volume of 67 million, blowing away the 53 million, and you're coming into the 51 million. We're going to do more than 51 million today. So the GDX is showing that wants to run up to $22.93, and that also is going to be all about interest rates. This is going to be a whole interest rate deal, and the Fed is going to blink. I think the Fed actually already did blink. You know, they claim that they don't watch the market. Well, guess what, man? Everyone better watch the market because the amount of wealth that just got toasted and roasted is pretty quick. And if you've been in this market for any amount of time, the acceleration on the way down is always brutal. 877-927-6648. Dow Industrials right now down 238. Get the Nasdaq off 18. S&Ps are down 24. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 280. You get the Nasdaq off 29. S&Ps are down 28. Let's go to our man, John in Philly. John, what's going on, brother?
Good morning, Tommy. Tommy, I'm calling about Schlumberger long-term on account of you just addressing oil stocks in your last segment. But before I ask you about that, the S&P cash index and its futures, the ESZ 8 contract, they're making lower lows right now. Is this a legitimate Tom O'Brien and Wyckoff jump the creek pattern going down?
Well, normally this is what ends up happening. When you actually jump the creek, which jump the creek, folks, is that you actually gap over it. And we didn't do that, John. So normally a jump the creek, that's exactly what it is. Now, this Wyckoff, this guy was fabulous. And he actually, when he was growing up, he grew up in a lake. And so what was happening, that's how this whole jump the creek thing comes to the basics, okay? That what ends up happening is that the lake freezes, you know, you're jumping it. So in this particular case, it wouldn't be a classic jump the creek. What it is, though, is a classic ABC down. You know, the first get-go, this is a 99.8 ABC down, and it broke the B point this morning, and it blew it away with volume. So it looks to me like February 9th is on the agenda right now, which is pretty intense.
Thanks very much, and specifying that jump the creek is, as you point out, from a prior close to a gap on the subsequent open.
Yeah.
Yeah, I'll remember that from now on. So thanks so much on that. Tommy, on Schlumberger, I just had to ask you this. Schlumberger, you know, is the biggest dominant company in oil service on the planet. And yes, oil prices are weak. Well, you know, they're weak from, 3 months ago, but relative to a year and 2 years ago, they're higher. And oil production globally is at record highs right now. And yet, investors are just, excuse my language, puking this stock. What is this telling you, and where is it going?
Yeah, let's look. This is an ABC down, too. One second. Let's do this. So this is right from the highs. You got 118.76 is your A. That's the high generated out in February of July of 2014. Your B point is 59.60. This is intense. So that's a 59.8 to B. Your C point is 87, 84. Okay, so you get $28.68. This blew away its B point with volume. It had 244 million. Oh, actually, it's going to be close because it did 222, and then we did 244. Interesting. So what happened is this, folks. Watch this. Your B point on this was the lows of January of 2016. Yeah, 244 million. Now, I've seen this plenty of times. You take that out, and you take it out with 222. So that's not a legit ABC down. That being said, guess what? You accelerated the next month to 244. And what I normally do with that, John, is I look, I say, okay, man, then all as I'm looking for now, I got to bring this back further, is you know that if that was an ABC down, you're talking about 30 bucks. So I put it on a monthly. It's like, okay, man, you're going after, you're going after $35, the next swing low, and
Right.
that's what it looks like, man. So, and that could be. Let me put this back further. Yeah, that's a problem child, man, and you can see.
Yes, I'm looking in Tiger TV, and yes, it is a problem.
Yeah.
Yes, indeed. Yeah.
And listen, that just might be a monster consolidation, but of course, that's quite a consolidation from 39 bucks to 118. But that's where it wants to go, man. I mean, that's
Right.
Yeah.
Right. Very good. Okay, Tommy. Thanks so much for your help, and appreciate your shows.
Wow.
They're really good.
Thanks, man. 877-927-6648. What you're watching out here, too, now watch this, folks. What you're going to see as this, basically, if there's more selling pressure comes in this marketplace, you're going to see these bonds continue to go to higher price. If we go over and we take a look at the 20-plus bond fund, the TLT, you're going to see that this came in with monster volume last week. You're going after, you're at 118.98, and this baby's going after the highs that were generated out here in July, which is the 122 area. We put this on a weekly, and yeah, you're in the higher range. Bottom line, you're in the higher range. Now, it's going to get really wild here, man, in the bond market in particular, is that are you actually setting up, and have you set up a head and shoulders bottom, which could be a mind blower? When you're looking at markets, folks, what seems to happen is that head and shoulders seem to be everywhere, so you really can't speculate on it. But let me tell you something. This would be quite a head if we built another shoulder, because that would be saying that on a longer-term basis, it's not only that the bond market doesn't want to go down, it's saying that these rates are going to stay low for quite some time. And if we do go over and we take a look at the world rates, what you're going to see is this. We're at 2.8%. So specifically what that means is that on a 10-year note, the United States government is paying 2.8%. Well, right now, France is in turmoil. They got unions, they got people, they got taxes, they got everything happening. Well, they're at 0.7%. It's like, really? We go to Germany, and they're paying 0.2%. You go to Portugal, which is broke, great country, but they're at 1.7. You go to Spain, which is broke, you're at 1.4. So when you take that and put that in one big ball, and you realize that we are in a one-world market, you can see our rates have a lot further to go down. It is what it is. And I'm not quite sure, why, when you look at that aspect of that, why that's the case, meaning that we're paying so much more. But bottom line is that, guess what? Money's flowing in there. We're not going to be paying, well, percentage-wise, we probably are going to continue to pay that much more than Europe. But when you actually take a look at the aspect of where they are versus where we are, interest rates, particularly percentage-wise, over what these other first world countries are paying, we are paying through the nose. So, the market basically is just saying once again that, guess what? Rates are going down. This is like the what is that movie? Oh, I love this movie too. With we all love this movie, I think. Groundhog Day. Groundhog Day, man. I mean, the bottom line is that if you take a look at the last 6 years, 7 years now, maybe more than that, bottom line is that many times, I'd say the majority of folks think the rates are going up. And this particular time, it seemed that, okay, the economy's doing great, everything's doing great. Bottom line is that, yeah, it would kind of make sense. Well, guess what? Wrong. Dow Industrials right now is trading down 280. Let's go over and take a look at that Dow. Yeah, Dow just broke out its lows. So the Dow Industrials right now, you just broke out the lows of October. You're going after the lows of August, which 23,990. But as I said a little bit earlier, we get a confirmed ABC structure down the S&P right now. That's the thing you want to pay attention to, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 350. You get the Nasdaq off 38. S&Ps are down 34. And, folks, you are also going to have volume on this market on the way down. If we take a look at the SPY already done 39 million shares. You're going into 160. It's going to blow it away. That low is 259.85. You can that's going to be gone. NDX 100 Qs, same type of setup inside the Qs. The Qs have already done 22 million shares. Bottom line, it needs 102. Qs are going to do about $1.40. Big numbers there. We take a look at the small caps. Small caps already blew away their their lows. And it had volume on the move. Actually, I didn't see this, man. Oh, this is trouble. So you got an ABC down in the small caps too. What a trip this is. Okay, 1 second. 173 to 144. $30 is 137. 137. Yeah, so 137's coming at us, and that's also going to bring you under the high volume low. 142.50 is the number. In fact, there you go. Bingo. 142.54 we hit today. So the small caps are already at the high volume low, but guess what, folks? You're going to do more volume then that high volume low, and that would put in play 127 inside the small cap. So there's trouble in paradise out here. You're going to more than likely get an acceleration of volume. We're going to see that out there today as we basically start this trading week. And as I said a little bit earlier, it's problematic when you only have 15 trading days left in the year. Bottom line, looks like they're all going to break down. If you haven't checked out the gold report yet, folks, check it out. New edition out there today. You can get it for a month, 6 months, a year. It's the only thing that's green in the marketplace, folks, and I suspect it's the only thing that's going to stay green. Stay right there, folks. We get Fast Market coming up next. Then we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Have a great one, folks. Have a safe one.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.